Welcome to Podcast Plus Breaking News Podcasts. Today we're diving deep into, well, a pretty comprehensive overview of the trends really shaping the U.S. economy and the business landscape right now. This is all based on our research here at the Podcast Plus Research Center.
Yeah, we've looked at a whole lot of news, haven't we? Everything from, how people are spending their money to the big tech shifts impacting businesses.
Exactly. The idea is to give you a clear, insightful picture of what's happening right now and maybe, just maybe, what it could mean down the road.
Trying to pull out the really important stuff from all that information.
Right. Help you feel informed without getting totally overwhelmed. We'll touch on consumer spending, venture capital, M&A, e-commerce, the gig economy.
Green tech too, real estate, supply chains.
The tech sector shakeup, inflation, global trade, small businesses, the works. Trying to give that multifaceted view.
Okay, let's jump in. Where should we start?
Well, let's start with consumer spending. How are people's spending habits changing?
Okay, so diving right in there. According to our research, it's kind of a nuanced picture, actually. We're definitely seeing a clear shift towards people prioritizing necessities, essential goods, and looking for value.
Which makes sense, given the economic climate.
Totally. But it's not all about just tightening the belt. There's still a real appetite for experiences like travel, entertainment, dining out when people feel they can afford it.
So it's like this balance. Being strategic day to day, but still wanting those memory-making moments.
Exactly. It's that mix of necessity and, aspiration.
And where we spend seems important, too. Online shopping is obviously still huge.
Oh, absolutely.
But I think you mentioned something about local and sustainable gaining ground again.
Yeah, it's an interesting counter trend almost. You've got the convenience of online, but also this growing desire to support local businesses, maybe more sustainable options. It's a dual thing.
And businesses are noticing this shift.
They have to. We're seeing way more flexible payment options pop up, more personalized promotions, trying to tailor deals.
Loyalty programs seem bigger than ever.
Huge. It's all about meeting consumers where they are, right? Both financially and maybe in terms of their values, too.
And obviously things like consumer confidence, real wages, those bigger economic indicators, they'll keep playing a massive role.
For sure. They set the underlying tone.
Okay, let's switch gears to the startup world. Venture capital. It sounds like things have cooled off from those really frothy valuations we saw a little while back.
Yeah, recalibration is the word we're seeing a lot. There's definitely been a shift. Investors are really zeroing in on the fundamental health of the business now.
Meaning,
is it profitable? Or at least, is there a clear path to profitability? Do the unit economics actually make sense? Is there real market traction?
So less about just the big idea and more about the execution.
Pretty much, yeah. I mean, there's still tons of interest in hot areas like AI, biotech, climate tech, cybersecurity. Those are still attracting money.
But the bar is higher.
Definitely higher. Especially for late-stage funding. Startups are really being pushed to be capital efficient. Watch that burn rate.
It sounds like a maturing market, maybe.
That's a good way to put it. It's maturing, even though, the U.S. is still the dominant global player in VC.
Okay. Now, what about the big companies? Corporate consolidation, mergers, and acquisitions. Seeing a lot of activity there.
Yeah, quite a bit, actually, across several sectors, too. Tech, healthcare, financial services, even consumer goods.
And what's driving that? Is it just about getting bigger?
Well, sometimes it is about market share, yeah. But it's also about gaining new capabilities, maybe acquiring specific tech or talent. Sometimes it's about economies of scale or diversifying what they offer or even expanding geographically.
So multiple strategic reasons. Could be buying innovation, by snapping up startups, or just trying to reduce competition.
Exactly. All of the above, really.
But merging companies isn't easy, right? There must be challenges.
Oh, absolutely. Integration is a huge hurdle. You've got different company cultures clashing, different IT systems.
Regulatory hurdles, too, sometimes.
Definitely. And yeah, cultural clashes can be a really big deal. So analysts and regulators are watching closely how these deals impact, market structures, competition, and ultimately value for shareholders and consumers.
Right. Okay, speaking of consumers, let's talk e-commerce. Its dominance just keeps growing, it seems.
It really does. It's fundamentally reshaping retail and just how we all buy things. Digital sales keep taking a bigger slice of the pie, but it's not like physical stores are disappearing.
No, they're adapting, right? That omni-channel thing.
Exactly. That's the key word.
Oh.
Integrating online and offline. Think click and collect, using apps in store, that sort of thing. Consumers want that seamless experience.
Convenience, personalization. They expect it now.
They do. And it's not just the giant marketplaces anymore. We're seeing things like social commerce really take off, buying directly through Instagram or TikTok.
Live shopping events, too.
Yeah, and subscription models for everything from coffee to clothes. It's all changing how retailers operate.
And putting huge pressure on logistics, especially that last-mile delivery.
Massive pressure. The companies winning are the ones who can blend online and offline well, and crucially, use all that customer data effectively.
Okay, let's shift to how we work. The gig economy. Still expanding.
It is, yeah, and it's way beyond just ride-sharing or food delivery now. It covers a huge range of services.
What's the appeal? Flexibility.
That's a big part of it for workers. Setting your own hours, maybe having diverse income streams, and for businesses, it can be cost-effective. Easier to scale up or down, access specialized skills for specific projects without hiring full-time.
But there are ongoing debates about worker classification, benefits.
Oh, absolutely. That's the flip side. Big questions around, minimum wage, healthcare access, Social Security, unemployment benefits for gig workers. It's a major policy discussion that's definitely not settled.
Makes sense. Okay, moving to something potentially more positive, the green tech boom. Seems like a lot of momentum there.
There really is. We're seeing a huge surge in investment, renewables like solar and wind, obviously, but also battery storage, EV infrastructure.
What's driving it? Just environmental concerns?
That's a big part, for sure. But increasingly, it's also about the economic opportunity. These technologies are becoming more competitive.
And government incentives help, I imagine, like the Inflation Reduction Act.
Absolutely. Policies like that are giving it a major boost, accelerating the shift.
And it's creating jobs, too, right? In manufacturing, installation, maintenance.
Definitely. Across various sectors. Plus, companies themselves are seeing the benefits of integrating sustainable practices. It's not just about corporate responsibility anymore.
Right, it can be about long-term cost savings, brand image.
Attracting talent, appealing to conscious consumers. It's becoming a strategic advantage, really. And it ties into the goal of tackling climate change and positioning the U.S. as a leader in clean energy.
Okay, let's talk about something that hits close to home for many. The real estate market. It's been volatile.
Volatile is a good word for it. Yeah, lots of ups and downs. We've seen big swings in home prices and especially mortgage rates.
So what's the current picture?
It's really varied. Some areas still have pretty strong demand, keeping prices up, but in many other places, higher interest rates are definitely cooling things down, moderating sales, maybe some slight price dips.
And the Fed's actions are key here.
Hugely influential. Their monetary policy directly impacts mortgage rates, which is a massive factor for affordability.
What about inventory? Is the lack of homes for sale still an issue?
In many places, yes. Where inventory is tight, it's still supporting prices, even with higher rates.
So it's becoming a very localized market. What's happening in one city might be totally different from another.
Exactly. You really need to look at local conditions, local job growth, demographics. It's much more nuanced now than maybe a couple of years ago.
Okay. Let's shift again slightly supply chains. Hearing a lot about reshoring or nearshoring. What's that about?
Well, the pandemic and various geopolitical events really exposed the vulnerabilities in long, complex global supply chains.
Right, the disruptions were massive.
They were. So there's this growing trend now for companies to bring manufacturing back to the U.S. that's reshoring or closer, maybe to Mexico or Canada, nearshoring.
So it's less about purely chasing the absolute lowest cost now.
It seems that way. The focus is shifting towards resilience, reliability. Companies want shorter lead times, more control over quality, and less risk of disruption from things happening halfway across the world.
Makes sense. Are they investing more domestically?
Yeah, investing in domestic capabilities, building partnerships here in North America, and there are some government incentives pushing this way too.
Interesting shift. Okay, the tech sector. Big topic. Lots of headlines about layoffs, but at the same time, AI is exploding. How do those fit together?
It's a fascinating dynamic, isn't it? There's been a significant wave of layoffs at many major tech firms, often citing overhiring during the pandemic boom or economic uncertainty.
But then AI.
Simultaneously, there's this massive investment rush and hiring push for AI-related skills. Machine learning engineers, data scientists, AI ethics specialists. Demand is soaring.
So it's like a workforce rebalancing act. Cutting back in some areas while heavily investing in AI talent.
That's exactly what it looks like, a strategic pivot. Companies are optimizing their workforces, maybe shedding some legacy roles while betting big on AI to drive future growth, efficiency, new products.
Which means the skills needed are changing rapidly. Adaptability is key.
Absolutely critical. For employees, it means continuous learning, maybe reskilling. For employers, it means finding or developing that AI talent. AI isn't just a buzzword, it's actively reshaping operations and even business models.
And we can't ignore inflation. It's still a major headwind, right? Along with the Fed's response.
Still very much part of the conversation. Persistent inflation continues to bite into consumer purchasing power and squeeze business profit margins.
And the Fed's staying hawkish, keeping rates relatively high.
So far, yes. Their main goal is to cool inflation, even if it means slowing the economy down. That high interest rate environment makes borrowing more expensive for everyone.
Which impacts business investment, consumer spending on big-ticket items.
Exactly. There are real concerns about the potential impact on economic growth, on employment. Businesses are adjusting strategies, trying to manage higher costs, navigating those shifts in consumer demand. Everyone's watching the Fed very closely.
And globally.
Yeah.
How are international trade dynamics factoring in?
Well, geopolitical tensions are definitely making things more complex for U.S. businesses operating internationally. Like worries over tariffs, changing trade agreements, political instability in certain regions. It's forcing companies to really reevaluate their global supply chains, where they source materials, which markets they rely on.
So more focus on risk management, diversification.
Absolutely. Diversifying suppliers, maybe exploring those nearshoring options we talked about, building more resilient networks. It requires much more sophisticated strategic planning and careful management of international partnerships.
Okay, let's end on maybe a slightly more optimistic note. Small businesses. How are they faring amidst all this uncertainty?
You know, it's interesting. Despite all the challenges, labor shortages, supply chain snags, inflation, we're seeing a remarkable level of resilience, even cautious optimism from many small businesses.
Really? What's driving that?
It seems to be a mix of things. Innovative business models, really strong community engagement, maybe being more agile and able to pivot quickly compared to larger corporations.
And local support programs probably help too.
They definitely play a role, but fundamentally, it's that determination, that adaptability of small business owners, and their health is such a crucial indicator for the broader economy.
That was a really comprehensive tour through the current landscape. We covered a lot of ground, drawing from all that research at the Podcast Plus Research Center, from consumer shifts to VC changes, tech transformations.
Yeah, trying to connect those dots between consumer behavior, business investment, technological change, policy decisions. It's all interconnected.
Hopefully this deep dive gave you, our listener, a clearer picture of the key trends shaping things right now. Maybe sparked a few aha moments, as you said.
Yeah, seeing that bigger picture is really what it's about.
Absolutely. And if you found this deep dive valuable, if you want to help us keep producing these programs, please do consider supporting us here or on Patreon. Your support really does make a difference.
It does.
Thank you so much for joining us today. Stay curious about what's next.